Hi guys, I'm Sarah, your CPA. I know it's been a while since I've done a YouTube video and you guys probably thought that I had stopped providing YouTube content, but I have not. I've just been busy with life and firm and working and stuff. 2023 has been great so far for us, and I hope it's been good for you guys and your business as well. I know that you're very busy and that your time is valuable, so I'm going to get straight to the point. So I'm doing this video to talk to you guys about if you've heard of ERC, ERTC, it's Employee Retention Tax Credit. And you very well may have been inundated with phone calls, text, emails, and social media ads. A lot of you guys are reaching out about this, and so I just thought I would do a mass video and send it out to you guys. So what is Employee Retention Tax Credit? It is another form of COVID relief. Yes, another form of COVID relief. It's been 3 years and we're still dealing with COVID. Unfortunately, it's probably going to be around. But anyway, this is a good thing, a good COVID-related thing. So many of you guys, we have gotten the ERTC for. In fact, I just added it up, and it looks like we've gotten our clients about $5 million, over $5 million so far of this. It's a very legitimate form of COVID relief. It is based on the number of employees that you have on payroll. I'm not going to get real detailed into the calculations because it does get complicated. I'm not going to bore you with that, but I'm going to tell you there are two ways to qualify for the Employee Retention Tax Credit. First off, you have to have employees. And if you don't have employees, you can turn the video off now because it's not going to apply to you. But if you have employees, then I want you to think about two ways that you could qualify. One, you were government mandated to completely or partially shut down, completely shut down. That was all of us really, all of us for a while to shut down, and then partially government mandated shutdown. So a lot of our restaurant clients qualify for ERTC based on this way because there were government restrictions on the capacity that restaurants could have. Restaurants could still operate, but they could operate a drive-through and then a limited capacity inside. And that went on for a while. So that is an example of a partially mandated government shutdown. You will know if you are partially mandated to shut down, if COVID restricted your operations in a significant way. If you believe that that applies to you, give us a call, we'll talk through it, and we'll help you determine if you qualify or not. The other way that you qualify for ERTC is if you have a reduction in gross receipts, so a reduction in income. And it's not just as easy as looking at your total income for the year. It is a quarter-by-quarter comparison for 2019 to 2020 and 2019 to 2021. So it's a 50% reduction from 19 to 20, quarter by quarter, and a 20% reduction quarter by quarter comparing 19 to 2021. So for example, if you had gross receipts of $1 million first quarter of 2019, then you would have to have less than $800,000 gross receipts for the first quarter of 2021 in order to qualify. There are some special rules there where if you qualify in one quarter, we can use an alternate quarter election to help you qualify for the next quarter. Those are special rules for certain quarters. The calculations are very complicated. There's certain employees that don't qualify. It is maxed out either by quarter or by year. I'm not going to get into all of that. I'm just going to tell you that if you think you had a bad quarter, now year over year, 19 compared to 2020 may be up compared to 19, or 2021 may be up compared to 19, but it's possible you had a bad quarter in there, so you might qualify. So a lot of you guys, we have worked through this and we've already reached out and let you know if you qualify. A lot of you guys, if we keep the monthly books, we've worked through it and we realize you didn't qualify. But if you have any questions at all, we want to answer those questions for you. We're preparing a lot of these forms. The money comes to you through an amended payroll tax form. and it takes a few months to come in. At first, it was taking like a year for the money to come in. Now it's looking like about 3 months for the money to come in. I'm telling you guys this because we want to help you. We want to help you get this money. Also, we want to help you avoid these fly-by-night ERTC, I don't want to call them scammers, but they're definitely not going to be there long term. If you're looking for ERTC, we want to be the one that gets it for you to make for sure that it is accurate. It is, say, taxable income. It's a reduction in wages. So we will have to handle that on your books and your tax return. We want you to use us and not someone else that's not going to be able to be there to support you. And a lot of these people that are preparing these are charging a really large percentage of the credit that they get you, like 20-25%. They're charging that, and so obviously we're not charging that much. So just reach out if you have any questions on this. We would love to help you. Contact your manager at our office, and if you know a business owner that doesn't have a CPA, or some businesses have reached out to us because they've asked their own CPA about ERTC, and their CPA is like, nah, it's really complicated and I really don't want to mess with it. And so we've had other businesses in town reach out to us, and we're preparing ERTC work for clients or for businesses that are not regular monthly clients. So if you have a business owner friend that you think this might apply to, please let them know. Share this video with them. We're happy to sit down and do an analysis for them to see if they would possibly qualify for this as well. Thanks so much, and y'all have a good weekend.